Hey, what if I told you Elon Musk just pulled off one of the boldest financial theater moves of the year, and it might change everything about how investors, boards, and the public read billionaire signaling? Today on Money Route, we're unpacking exactly what happened when Musk quietly bought about $1 billion of Tesla stock, why it matters, and why some people say it's a brilliant show of confidence, while others call it a power play to grab more control. Stick around, I'll walk you through the filings, the market reaction, the motive, and 3 scenarios for what comes next, and how you, the investor, or Tesla fan, should think about this. Sources for the key facts are linked as we go.
Opening facts first. Last week, Elon Musk bought roughly 2.57 million Tesla shares in open market transactions, a package worth about $1 billion, according to regulatory filings and multiple news outlets. The move set Tesla shares higher in early trading and erased much of the stock's decline for the year. This was Musk's first open market purchase of Tesla stock since 2020. Why this story exploded overnight? 1. It's rare, a CEO of Musk's profile buying their own stock in open market trades, rather than, say, receiving options or a board-endorsed award, is news. For a founder with massive influence, a public purchase signals personal conviction. That's the immediate market read. If Musk is willing to plow personal capital into Tesla, maybe the company's future isn't as bleak as naysayers claim. Investors demanded more clarity, and the stock popped.
2. The timing is spicy. The purchase came a week after Tesla's board put forward an unprecedented, headline-making compensation proposal for Musk, a package that, if approved, could be worth up to a mind-bending sum tied to huge market cap milestones. Critics say that kind of package is effectively a license to print wealth if extreme targets are met. Supporters argue it aligns CEO incentives with shareholder returns. Musk's purchase reframed the narrative. Was he showing faith because he believes he can hit those targets? Or was he trying to influence sentiment ahead of the shareholder vote? Either way, public perception matters. 3. Control and optics. Musk has periodically pushed for more voting power and influence at Tesla. News coverage noted Musk previously held a significant stake, historically reported around the low teens % range, and has publicly signaled interest in higher voting control in the past. A $1 billion buy doesn't transform ownership overnight, but it does change optics and can make it harder for critics to argue he's abandoning the company. It also gives him more leverage in corporate conversations. What the numbers say? Simple, clear. Shares bought. Roughly 2.57 million shares. Approximate value. About $1 billion. Market reaction. Tesla shares rose several percent immediately after the disclosure and reached intraday gains large enough to move the stock from negative to positive territory for the year. Those are blunt, verifiable outcomes. Now the real question: motive, confidence, or control? There are 3 plausible motivations, and Musk's past behavior makes all of them believable. Scenario A: genuine signal of confidence. Musk may actually believe Tesla's best days are ahead. The business is pushing into robo-taxis, advanced AI-driven products, and robotics, areas Musk has long said will define Tesla's long-run value. Buying stock with personal capital signals alignment. If Tesla pays off, Musk benefits alongside shareholders. For value investors, founder buys are often a green flag. They show someone with the most inside information is placing a bet. Scenario B: defensive posture ahead of governance battles. The timing near the compensation package proposal and potential shareholder votes invites a less flattering read. Musk is shoring up his narrative and influence. If the board wants to pass an enormous incentive plan that depends on shareholder approval, a CEO buying stock with personal money can be positioned as proving skin in the game. But it also makes a statement to the market and to voting shareholders. I'm not leaving, I'm doubling down. That can sway undecided voters and complicate activist or institutional critiques. Scenario C: financial engineering/optics for external ventures. Musk runs multiple ventures and lives in a high-stakes PR ecosystem. A big personal purchase can be tactical to counter negative headlines, to blunt movements like sell Tesla campaigns, or to stabilize the stock ahead of financing, JV talks, or big product reveals. The difference between this and scenario A is intent. Confidence versus reclaiming the narrative. Both are real possibilities. Why critics are suspicious and why you should pay attention. Whenever a billionaire buys a chunk of their own company, critics ask, is this for the shareholders or for the CEO's agenda? Here are the honest concerns. Scale. $1 billion is big, but for Musk's net worth, it's a tactical move more than a life-changing bet. Critics will point out that a billionaire can spend $1 billion to shape headlines. That's optics, not a commitment to long-term minority owner economics. Voting power. Beefing up ownership. Even a little can have outsized governance consequences if combined with other voting levers. Critics worry about concentration of influence. Diversion risk. Musk's portfolio of projects. AI, social platforms, space creates a narrative risk. Are resources and attention being spread too thin? Buying stock doesn't answer that question. It only shifts the conversation. 3 practical takeaways for investors and viewers. Don't fetishize headline buys. Founder purchases are data points, useful but not definitive. Look at fundamentals, production numbers, margins, delivery growth, and competitive dynamics in EV and AI. The buy improves sentiment, but it doesn't build factories or move supply chains. Watch governance and shareholder votes. Big compensation packages and changes in voting structure matter more than one-off purchases. If you're an investor, pay attention to proxy statements, board independence, and whether pay plans are tied to realistic, measurable milestones. The buy may be a curtain raiser for a bigger governance fight. Manage risk. If your allocation to Tesla is based on hype rather than valuation or risk tolerance, consider rebalancing. A CEO buy can be a short-term catalyst for stock movement, but markets revert to fundamentals over time. The counter-arguments you'll see in the comments. Expect 2 tribes. Musk is a genius, buy the dip, and it's a PR stunt, sell everything. Both sides will cherry-pick. My advice, use the buy as a trigger to recheck your thesis. Is Tesla's long-term story about energy and AI still intact for you? If yes, the buy is a small positive. If no, don't let headline-driven momentum pull you into misunderstanding risk. What this means for the broader market and billionaire behavior. There's a larger cultural shift here. Billionaires used to be private players. Now they're public theatrical figures whose every move is traded like market news. Musk's purchase is a reminder that in the age of social media and instant filings, every financial action is also a PR action. That increases volatility and means retail investors have to be savvier about separating signal from performance theater. Final analysis, my view, and why it's controversial. Here's the controversial take that'll probably flood the comments. Musk's $1 billion purchase is both sincere and strategic. It's sincere because someone who built Tesla still believes in the transformational potential of the company. It's strategic because of timing, near a historic compensation proposal and amid political headwinds, and because a billionaire can tilt public perception with a move this size. In short, it's not pure altruism. It's not pure manipulation either. It's power, dressed as confidence. That makes it effective and morally ambiguous. People who deny either side are missing the most interesting part. Elon knows optics and uses them as part of his business toolkit. What do you think? Is this a genius founder buy or a billionaire trying to grease the wheels? Drop a comment with one clear reason you'd buy, sell, or hold Tesla right now. If you want, include the word buy, sell, or hold at the top so we can tally reactions in the pinned comment. If you want a follow-up, tell me which scenario you want me to deep dive into. The compensation package and governance risks, the robo-taxi/AI thesis, or a valuation breakdown of Tesla's core auto business. If you liked this breakdown, hit the like button, Subscribe for weekly Money Route deep dives on billionaire moves that actually affect your wallet. And share this video with someone who needs to stop buying on hype. I'll be watching the proxy filings and shareholder votes closely. If anything big drops, I'll post a follow-up with the receipts and the play-by-play.